Bitcoin has experienced a significant price surge, reaching $118,000, marking a robust recovery phase after a period of market volatility. This bullish momentum has captured the attention of investors and analysts, signaling renewed confidence in the cryptocurrency market. Key factors driving this upward trend include geopolitical developments, regulatory changes, and advancements within the Bitcoin network itself. These elements have created a favorable environment for growth, encouraging increased participation from both institutional and retail investors. The impact of Bitcoin's resurgence extends beyond its own valuation, positively influencing the broader cryptocurrency market. Altcoins, such as Ethereum, have also seen value increases, demonstrating Bitcoin's pivotal role as a market leader. This trend has further benefited the decentralized finance (DeFi) sector, which is closely linked to blockchain innovations and Ethereum's ecosystem, leading to a rise in investments. Additionally, non-fungible token (NFT) platforms are experiencing increased user engagement and trading activity, suggesting a broader stabilization and potential for sustainable growth across the crypto landscape. Looking ahead, while analysts remain cautiously optimistic, they advise investors to monitor global economic indicators and technological advancements in the crypto space.
The impending implementation of 50% tariffs by former U.S. President Donald Trump on Brazilian goods threatens to significantly disrupt Brazil's economy, particularly affecting its key export sectors. As the world's largest exporter of commodities such as beef, chicken, soybeans, and coffee, Brazil is bracing for substantial financial losses. The Confederation of Agriculture and Livestock anticipates a $5.8 billion hit to the agriculture sector alone. Additionally, industries like aeronautics, where companies like Embraer rely heavily on the U.S. market, face severe repercussions, potentially leading to workforce reductions reminiscent of those seen during the COVID-19 pandemic. The political underpinnings of these tariffs, tied to allegations against Brazil's ex-president Jair Bolsonaro, complicate the potential for a swift resolution. Current President Luiz Inácio Lula da Silva is advocating for continued negotiations, though initial diplomatic efforts have yet to yield results. The Brazilian government is exploring alternative strategies, including offering credit lines to affected companies and restructuring trade relationships with other global partners such as the European Union and Canada. However, redirecting exports, particularly in specialized sectors like aircraft manufacturing, poses significant challenges. The situation underscores the precarious balance of international trade dynamics and the broader economic implications of politically motivated trade policies.
Albert Edwards, a prominent strategist at Societe Generale, has issued a cautionary note to investors, warning of an impending market correction due to what he terms an everything bubble. Edwards, renowned for accurately predicting the dot-com crash of 2000, suggests that both U.S. stock prices and the housing market are overvalued and poised for a downturn. He highlights that while other countries like the UK and France have seen a decrease in the home price-to-income ratio, the U.S. has not experienced a similar correction, even as bond yields have risen. This warning comes amid a backdrop of elevated stock valuations, with major indices such as the Nasdaq 100, S&P 500, and Dow Jones Industrial Average reaching significant highs. The potential bursting of this everything bubble could lead to significant market volatility, impacting investor sentiment, and potentially leading to a re-evaluation of asset prices. Edwards' analysis suggests that investors should brace for potential declines and reassess their portfolios to mitigate risks associated with overvalued assets.
The recent focus on infrastructure stocks has highlighted NVIDIA, Alphabet, and International Business Machines, IBM, as key players. According to MarketBeat's stock screener tool, infrastructure stocks typically represent companies that build and maintain essential physical systems, benefiting from stable cash flows due to long-term contracts and government support. These stocks are attractive to investors seeking steady income and lower market volatility. NVIDIA is noted for its significant market presence in graphics and compute solutions, with its stock trading up to $173.54, reflecting a positive market sentiment. The company's robust financial metrics, including a market capitalization of $4.23 trillion and a low debt-to-equity ratio, underscore its financial stability. Alphabet, with its expansive portfolio of services including Google Cloud and YouTube, saw its stock rise to $193.43, supported by a strong market cap of $2.35 trillion. The company's relatively low debt-to-equity ratio and consistent trading volumes suggests solid investor confidence. Meanwhile, IBM's focus on hybrid cloud and AI platforms positions it as a pivotal player in digital transformation. However, its stock experienced a downturn, trading at $259.45, possibly reflecting market concerns over its higher debt levels and the challenges of sustaining growth in a competitive tech landscape. These trends in infrastructure stocks underscore the dynamic interplay of market forces and company-specific factors influencing investor decisions.
Finance Minister Nirmala Sitharaman has underscored the importance of sustaining economic growth in India amidst global uncertainties, emphasizing increased public capital expenditure as a pivotal driver of development. This focus comes as India's GDP growth has slowed to 6.5% in FY25, marking the slowest rate in 4 years, compared to a 9.2% expansion in the previous fiscal year. The Economic Survey forecasts GDP growth for FY26 between 6.3% and 6.8%, and the Reserve Bank of India (RBI) has revised its growth forecast for the current year to 6.5%. The government's strategy includes boosting public investments and enhancing foreign direct investment (FDI) policies to attract more investments, fostering competition among states, and creating jobs. Sitharaman highlighted the prioritization of bilateral trade agreements over multilateral ones, citing recent deals with Australia, the UAE, and the UK, and ongoing negotiations with the US and the EU. She also mentioned cautious improvements in relations with China, which could lead to increased economic collaboration. These efforts reflect India's strategy to remain competitive and influential in the global economy, while addressing domestic fiscal constraints and economic aspirations.
Egypt's trade deficit has reached its lowest point in 6 years, narrowing by 18% year-on-year to $14.3 billion in the first half of 2025. This improvement is attributed to a significant rise in exports, which increased by 22% to $24.5 billion, countering a modest 3% increase in imports. The Egyptian government has set a strategic goal to boost exports to $145 billion annually by 2030, with industrial products expected to play a major role. This export boom is crucial for enhancing foreign currency inflows and reducing reliance on external borrowing, especially as revenues from the Suez Canal face challenges due to regional security threats. Key export markets include the United Arab Emirates, Turkey, Saudi Arabia, the United States, and Italy, with the UAE experiencing a notable 163% increase in imports from Egypt. Leading export sectors, such as building materials, metals, chemicals, fertilizers, and food industries, underscore Egypt's diversified export base. Policy shifts are underway to support this growth, including a revised export subsidy program that incentivizes increased local content. The government has nearly doubled its export support budget to 45 billion Egyptian pounds for the 2025-2026 fiscal year, aiming to strengthen the country's global trade position and economic resilience.
Thermo Fisher Scientific (NYSE) experienced a downgrade from HSBC Global Research, which lowered its stock rating from strong buy to hold. This adjustment comes amid a mix of analyst opinions, with some like Wall Street Zen upgrading the stock to a buy, while others, such as Evercore ISI and Stifel Nicolaus, have reduced their target prices, indicating a cautious outlook. Despite these mixed signals, the consensus rating for Thermo Fisher remains a moderate buy, with a notable average price target of $593, as reported by MarketBeat.com. This suggests that while there is some skepticism, overall market sentiment remains optimistic about the company's prospects. Thermo Fisher's recent quarterly earnings report showed a slight beat, with earnings per share (EPS) of $5.36 surpassing the anticipated $5.22. The company's revenue for the quarter was $10.86 billion, a 2.9% increase from the previous year, showing resilience in its financial performance. The firm's solid return on equity of 16.82% and net margin of 15.24% further underscore its operational efficiency. However, the stock opened at $478.61, which reflects market caution, possibly due to the broader economic environment or specific sector challenges. The company's strategic moves, such as maintaining a steady dividend payout and insider trading activities, indicate a focus on shareholder value. With 89.23% of the stock owned by institutional investors, confidence in Thermo Fisher's long-term potential remains strong, as it continues to provide life sciences solutions and expand its market reach. The company's ability to navigate market dynamics will be crucial in sustaining its growth trajectory and meeting analyst expectations.
The cryptocurrency market is experiencing a notable correction, with Ethereum, ETH, slipping 2.7% below the $3,700 threshold to $3,598.12, and Solana, SOL, declining by 3.89% to $178.54. This downturn, occurring between July 22 to 24, 2025, reflects broader market volatility influenced by macroeconomic concerns and specific sector developments. Ethereum's decline follows recent peaks driven by ETF inflows and the Pectra upgrade, with technical indicators like an overbought RSI suggesting potential further drops. Meanwhile, Solana's dip is partly attributed to regulatory actions affecting meme coins and ongoing geopolitical tensions, though strong ETF approval odds could support future recovery. Amidst these shifts, investors are increasingly eyeing decentralized finance (DeFi) projects with promising growth potential, such as Mutuum Finance (MUTM). This project is gaining traction due to its innovative stablecoin model and dynamic token ecosystem, which offer sustainable yields and robust security measures. Mutuum's pre-sale has already raised significant capital, signaling strong community engagement and investor confidence. With a strategic roadmap that includes Layer 2 integrations and cross-chain capabilities, Mutuum Finance is positioning itself as a high-yield alternative in the DeFi space, drawing interest from both retail and institutional investors seeking diversification and long-term value.
Former Trump economic advisor Stephen Moore expressed optimism about the U.S. economic outlook, citing the positive impact of forthcoming trade deals. During a Newsmax TV interview, Moore emphasized that these agreements could mitigate inflationary pressures stemming from tariffs, suggesting that inflation remains moderate. He highlighted the completion of significant legislative measures, referring to them as the Big Beautiful Bill, which he believes will further strengthen economic prospects. Moore's comments come amid ongoing discussions about the Federal Reserve's interest rate policy, though he remains confident in the economy's resilience regardless of potential rate adjustments. Moore's bullish stance on the economy is noteworthy as it aligns with efforts to reduce inflation closer to the Federal Reserve's target of 2%. The mention of trade deals as a counterbalance to tariff-induced price increases underscores the importance of international trade agreements in stabilizing consumer prices. This perspective may influence market sentiment and investor confidence, particularly in sectors sensitive to trade policy changes. As the Federal Reserve deliberates on interest rates, Moore's outlook suggests that economic fundamentals remain robust, potentially supporting continued growth and stability in the financial markets.
Advisor OS LLC has increased its stake in McKesson Corporation, NYSE-MCK, by 20.2% during the first quarter. According to a recent SEC filing, this move is part of a broader trend among institutional investors and hedge funds, which have been adjusting their positions in McKesson. The company's stock has been performing robustly, with a recent opening price of $711.80 and a market capitalization of $89.05 billion. Analysts have been optimistic about McKesson's prospects, with several firms, including UBS Group and Morgan Stanley, raising their price targets and maintaining a buy or overweight rating on the stock. The consensus target price for McKesson is currently $710.17, indicating moderate buy sentiment among analysts. Recent insider transactions have also been noteworthy, with CFO Britt J. Vitalone and EVP Leanne B. Smith selling significant portions of their stock holdings, which might suggest profit-taking strategies given the stock's recent highs. Despite these sales, McKesson's financial performance remains strong, with the company reporting quarterly earnings of $10.12 per share, surpassing analysts' expectations. Revenue for the quarter was $90.82 billion, marking an 18.9% increase compared to the previous year. McKesson, a major player in healthcare distribution, continues to demonstrate growth across its segments, including U.S. pharmaceutical and medical surgical solutions. The company also announced a quarterly dividend of 71 cents per share, reflecting a dividend yield of 0.40%. This stable dividend policy, combined with solid earnings growth, positions McKesson as an attractive investment for those seeking exposure to the healthcare sector. As institutional investors continue to adjust their holdings and analysts maintain a positive outlook, McKesson's stock performance is likely to remain in focus for market participants.